Pinterest Q3 earnings is in 2 days. And here's the truth. Pinterest isn't a price chart, it's a business. And today we'll decide if it's one worth owning. I've seen a lot of mixed views around the company, touted as either overpriced hype or an undervalued gem. Regardless of views, the focus tends to be on price rather than understanding the company itself. So if you want to understand the businesses behind your investments and hold them with conviction rather than chasing price and having anxious, sleepless nights, then keep watching, as my goal is to achieve exactly that with this video. You see, we're going to understand the Pinterest business model, covering its moat, its durability, as well as the bottlenecks preventing it today from doubling in size. At the end, we establish our stance as to whether Pinterest is a business that we want to own, watch, or avoid. Only then do we look at price to gauge what the market is saying about Pinterest and how this aligns with our understanding of the business. So what does this look like? Well, in a nutshell, we're going to be looking at the company first and the price last. We're going to look at the business model and how it actually makes money. Then we'll be looking at the capital discipline and the quality of management running it. We're going to be looking at the scaling bottlenecks. What is keeping it from scaling today? What are the behavioral traps that surround investors when looking at the company? And then we're going to have our own verdict. Is this something we want to own, watch, or avoid? Finally, we will look at price last. We use the price as a gauge around the market's mood towards the company, and then we can look at that against our assessment and see if this aligns or not. The purpose of this is to train us to think like owners, where we understand the business and we let the price come to us. Section 1, we look at the business model of Pinterest. In one sentence, describe what it does, what its customer problem is, who's paying us and why they keep paying us, how $1 actually flows from a customer through to us, and then finally, the moat of the business. So what is the Pinterest business if it's not just a mood board? Well, the Pinterest platform captures user purchase intent for goods and matches that intent with paying advertisers. At its core, they have something called the taste graph algorithm. Essentially, Pinterest is a marketplace, with its two distinguishing factors being the user experience on the platform, as well as the demographics this has attracted. So who pays us and why do they keep paying us? There are about 2 million global active advertisers allocating marketing budget to Pinterest and monitor that return on ad spend. Geographically, Pinterest is significantly skewed towards the US and Canada, with 78% of its revenue coming from there and 22% coming from the rest of the world. Within that, the advertisers tend to be in the retail and e-commerce space. When looking at the actual makeup of the customers of Pinterest, you'll note that it has a rather high concentration of customers, with 35% of revenue coming from just 10 clients. These are your types of like Amazon, Shein, Temu, Walmart, Target. Essentially, what's happening is we have a bit of a long tail overshadowed by large customers. And what do we mean by that? Well, we've got 2 million active advertisers, but we're severely dominated by these 10 large customers. Another factor within this is, given that we're looking at US and retail and e-commerce space, the volatility in earnings is driven by customer marketing budgets. And finally, revenue is not contracted. We're not sticky here. We don't have 10-year, 20-year contracts in place with our customers. These are simple bill-as-you-go target advertising models that tend to be habit-driven rather than contractual. And so what does that mean? Well, we rely on the habits of our customers to continue using Pinterest as an advertising platform, but they will closely monitor that return on ad spend as a means of justifying allocating marketing budget to us. So how do we as owners actually get any return holding Pinterest stock? Currently, if we look at the revenue and cash flows, it's noting that where are they allocating that capital that they generate, right? So they generated $998 million in the last quarter, of which they had gross profits of $803 million, so a significant margin. But what's more important here is where they're actually allocating that spend, right? You'll see that a significant portion, in fact, the largest portion of that goes towards research and development. And I kind of like that. That's what we want to see. We want to see that they're honing in that budget towards their key tech stack. If we look at the actual cash flows and how it goes from operations through to investing and financing outflows, The 2 points I wanted to highlight from their cash flow statements was the fact that they had some degree of capex spend, although minimal, but the biggest portion was around their share repurchase program that they've been running. So this is a good sign of management discipline. So the only return essentially that we get of capital from owning Pinterest is through the share repurchase program. It's not a dividend paying company. So what about Pinterest's moat and the durability of that moat? It touts to be a safe and inclusive environment for advertisers and users, and it puts this at the heart of its culture. You see, Pinterest has developed something called the taste graph algorithm within their platform, and that just maps users' interactions along its platform. And it does it for the most part relying on its own databases instead of that of third parties, which reduces the compliance risks associated with browsing on the platform. And in addition to the taste graph, we have the actual environment and user experience on the platform being this positive, inclusive, and brand safe platform. So what does the Pinterest moat dying actually look like? Well, essentially, it's just the user experience on the platform and people's mood towards it. If that environment gets corrupted in some way, turns toxic or scammy, and we get AI slop content or bot comments like we do on YouTube, that's an indicator of erosion of the Pinterest moat. So what evidence is there of management being disciplined with their capital? Well, firstly, they have a 2 billion share repurchase program that's in effect, and we saw that in the cash flows earlier, where they're actually repurchasing shares each quarter. We've seen some margin expansion with revenue outpacing operating costs. And then we've also seen some R&D at 45% of gross profit. I like that they're putting it into their tech stack. Another interesting quirk around management is that they've actually been letting out some of their unused office space, again showing that management is optimizing its use of resources. And finally, they have got a very liquid balance sheet and significant cash in marketable securities on hand. But it isn't all positive. There are some governance risks worth highlighting. The fact is that management is remunerated through PSUs or performance stock units. Effectively, they're just issuing shares as compensation for the execs. This has a recycling effect on the shares outstanding because on one hand, management's buying back its share capital, and on the other, it's issuing new shares to the executives, diluting the shareholder base. This is a very unfortunate situation because if it weren't for this, that share repurchase program would be a massive green flag, but it does get nullified by this fact. Another point is that the chief product officer left Pinterest, and in doing so received 8 figures of compensation after they left. Effectively, us as owners having to pay for an executive that wasn't doing anything for us. So these are behaviors of management that we want to closely monitor to make sure that they don't progress or get worse. Finally, I like to look at the incentives. How aligned is management with us as owners? Exec paid is tied to revenue and adjusted EBITDA hurdles above prior year figures. So overall, management very much aligned with us as owners. So what's stopping Pinterest from doubling in size today? Well, the very thing that drives its moat, its user experience, is the very thing holding it back from scaling, and that's around its culture. You see, the vision of Pinterest as being a positive, inclusive, and brand-safe platform takes priority over any potential short-term gains. So how do they work around this? Well, the focus of management and where they're actually spending their capital is around driving yield per impression rather than the total volume of impressions. So instead of just more spammy ads, Pinterest is focusing on actually customizing the user experience to the point that we get a much higher user intent to purchase on the platform than you would on other competitors. So when it comes to Pinterest, what is the lie that investors are telling themselves about this company? Is it anchoring? Is it loss aversion? Is it confirmation? Is it overconfidence? Is it FOMO or herding? Well, essentially what we're seeing is there's a bit of a narrative fallacy when it comes to Pinterest as an investment. What we mean by this is that the story that investors are telling themselves takes precedence over the actual math and numbers behind the business. We saw this where in Q2 there was a 2-penny miss on EPS. And what happened? The stock fell by over 10%. Weren't asking why would customers shift to competitors such as Meta or Google for their advertising? Why would they shift the budget away from Pinterest? No, they were just looking at the total number and saying, this is an AI winner or not an AI winner. So how do we mitigate this bias as investors? Well, we need to ensure that the math takes precedence over the story. We're aware that the story exists, and we establish ourselves a very strict kill switch. So now that we've looked at our business, what is the stance? Well, we've seen strong cash flows and management actually allocating that capital to the right places. We've seen that moat durability, right? The culture is taking precedence over short-term gains, and they are preserving that moat, and they are investing in that taste graph algorithm of theirs, which enhances the yield per impression. Management has also evidenced that they are being disciplined with the capital, despite there being some minor governance risks. When it comes to scaling the business, again, they're investing in the taste graph, but they're preserving the culture. There is obviously a presence of execution risk, but currently, given the R&D spend, this looks to be a focal point for management. And then lastly, we've addressed the behavioral bias that exists around this company. There is an AI narrative fallacy that exists that we need to be cautious of as owners, and we don't chase that crowd. So given that, this is currently classified as a business we would want to own. But we don't own anything without having very clear kill switch triggers that we monitor to ensure our capital is safe. Now, for every factor we have that drove our verdict around Pinterest being an own, there are kill switch triggers. These triggers are the things we want to monitor in each earnings report. We want to jump straight to them and get an assessment of what's going on. So for example, with strong cash flows, if we're seeing any signs of US ad softness or budgets, we want to ask ourselves why. Is that ad softness at a macro level, or is that their view or attitude towards Pinterest as a platform itself? Again, with the moat and durability, if we see Pinterest breaking that trust moat, what's the sentiment of users towards the platform and advertisers towards the platform? Do they still view it as a brand safe platform? We're also going to be looking at cash flows and expenses to see how management continue to be disciplined with capital. If they start redirecting that cash away from the core tech, away from the taste graph, away from R&D, then that's a red flag. Again, we've also highlighted the scaling constraints around the culture and the need for optimizing on yield impressions. This is something that Bill Reddy is in a position to overcome, but there is that key man dependency around Bill and his team. And again, this is something we'd want to monitor to ensure that either he's in place or there's clear succession planning that we can rely on and trust. And lastly, around the AI narrative fallacy, we're aware the market is currently oversizing Pinterest in this regard. They are currently hyping up this as an AI winner, but we do see that jittery volatility around it when it comes to earnings time. So they're looking for more evidence. Up until now, we've not even looked at what Pinterest is currently trading at because quite frankly, we don't care. All we wanted to do was analyze the company first. Now that we've established that and we've got a verdict of an own, now we can look at the price. Currently the price does reflect that of an AI winner, but the volatility is there. They are aligned in that bullish AI narrative with this being a Gen Z shopping assistant. There is that present fear around US ad softness or shifting budgets away from Pinterest to competitors. There was the tariff shock for non-US advertisers as well. But there's also the execution risk around this being a slow, manual and compliance-heavy yield per user, right? They need to have compliance officers in each of the territories and regions in which they operate to ensure that they are meeting regulatory safety standards. And lastly, the market is reflecting that confidence in management's ability to retain the moat and to continue scaling Pinterest. So where is the market out of alignment? Again, while we've got the AI bullish narrative, it's also a point where the market is oversizing in this regard, touting it as an AI winner without regard to the fact that we have this friction as we try to scale. Right, the fact is, as we do the R&D spend, we have to hire more engineers, more developers, more people on the back end to get the taste graph even better. That isn't AI, that isn't frictionless, that's people doing the work. There was that volatility around the Q2 2025 earnings. Again, this is something we'd look out for, but this is something that the market is not quite factoring in. They are volatile because they don't understand the business. They're following that AI narrative. And then finally, something that the market is overlooking are the governance risk concerns. We noted the fact that there was the share-based compensation. We noted the fact that the chief product officer left and that they had this 8-figure package for essentially doing nothing for the business. And then the final point is that insiders control this company. At over 73% of voting rights, us as owners don't really have a say in the business. Now, this is my first time doing a company first, price last analysis. I chose Pinterest because I find it to be an interesting business. I like the platform. I like how it differentiates itself as a shopping assistant from its competitors. And if you really enjoyed this video, I'd very much appreciate your feedback in the comments down below, a thumbs up, subscribe. It gives me an indication as to how I can improve these videos going forward. Thank you for your time for watching, and I'll see you in the next company first, price last analysis video.